Hey traders, I want to go over a setup I'm looking at right now because this is a major red flag, a major concern in the stock market. And I know you're probably Lance, market safe, Microsoft, Facebook, great earnings, Google, good earnings, Apple, Amazon after the close. But financials, we have to talk about them. They are lagging, they are lagging, they are lagging big time. XLF, we'll call this the big financial ETF. You can look at KRE for regional banks right there, which are getting hit down 4.5% today. XLF, though, I want to look at. That name makes up of Bank of America, Wells Fargo, Citigroup, JP Morgan, Goldman Sachs, and Visa right there. Financials are not moving higher. In fact, today they're showing weakness down again, almost 3%. The Russell 2000 with a false breakout. Yes, I said a false breakout. Over the past few days, we're starting to retrace. The Russell 2000 is down $5 today. That's a major concern. The Russell makes up of banks, specifically smaller banks and energy names. Now, if we look at KRE, the regional bank ETF, we're down about 4.5% there. Major concern. And one dark cloud, and it's always been a dark cloud for years. You have Deutsche Bank. It had a massive short squeeze on earnings. You had your other European banks like Credit Suisse. Again, big move, 8 to 9, actually 9 and change. You had Barclays, big move higher, down 5% today though. One thing I'm looking at, names like HSBC, okay? When the whole market was rallying, names like this, right near the lows, right? Less than $2 from the lows right now, HSBC. Big concern, if I look at names like AIG starting to fade lower, not big recoveries compared to the indexes. I think there's a lot of smoke and mirrors out there. Even when I look at US-based banks, Bank of America, again, look at this false breakout here, okay? We never took out the high, volume never accelerated. When we have a breakout, you need a volume breakout to take out the previous swing high. Never happened. And then Citigroup, okay? Citigroup, look at this false breakout here. False breakout, no volume, and here we are fading. Again, Wells Fargo, don't get me started. I think we all know about them. That's one of the worst patterns when you have a stock market index rallying that I've seen in Wells Fargo in quite some time. I think there's a major red flag, and the bank's going to drive the stock market lower. I know tech, they can be a rescue. They can be that shiny silver toy that everyone wants to play with. But when you look at the overall market dynamics, look at these banks. If they lead the way lower, you can play XLF. You can play Goldman Sachs. You can play Citigroup, JP Morgan, Wells Fargo. I personally like the European banks because I think they're going to move a lot lower, and I don't think they're as strong. Goldman Sachs, not even printing 100 here. Look for that. Keep track of it. You don't have to trade it if you don't want, but keep track of those European banks. HSBC is one that I'm looking for a downside play. And really, if you don't want to pick a bank, you can play the XLF or the KRE, the ETFs. But guys, I just want to bring something to your attention that I've been looking at. And I will be honest, the market has been gapping up, gapping down. But when I look at names that aren't moving, that are remaining weak, when there's strength in other indexes, and when there's, let's say, hope that the economy is going to reopen and everything like that, take a step back, look at the big picture, and say, all right, what's the catalyst for these banks to move up? Have a great day. We'll chat soon. Let me know what you like or dislike about the video. And like the video, subscribe, YouTube, all that fun stuff. Shoot me an email. Chat soon.